See where it's trading right now while that works. This is an entry right there, 59s. So this is part of the trading band, lower band. See how it came off this nice lower band, and then you have this CCI confirmation. Somebody was asking what that was. Is whenever CCI is down below 100, and then we're looking here now. What I normally like to see is this first impulse, and then this second impulse, like back through here. Second and third impulses is what you want to trade. You don't want to trade this first corrective impulse. Truthfully, I'd like to see this thing pull back into something like this and then try to give this another shot at the title would be kind of my ideal trade. Let's go over some trades real quick while we do that. So a lot of you guys are asking, you know, so here's the trade of the day. These are some of the trades that I took in my personal account this morning. Here was our loser here. And you can see, if you look at the rules, I thought we were getting a turn here. And what I didn't fail is you want to get this on the Bollinger Band. You want to get this in the bottom band here. You can see right here where it was still in the top band. But I saw this impulse and thought that we would see a corrective. I thought we would see a little bit of a retracement and be able to get a trade. Versus when this is in the lower band and you get it closing above this purple line here with this 5 EMA, you can see how this trade was a winner. This trade was a winner. You know, I got in here, got out there, got in here a little bit early, and then we got out there. But ideally, you want to see where you would get long in here at the 27s. That's why I took this one at 28, because I thought that was still a valid signal with a stop below this low. And you can see how it traded down. We took about 120 bucks heat, and then this thing rallied up, and I closed it once it got outside the Bollinger Band. Once this gets outside the band like that, you tend to see a little bit of a pullback. Same thing here. Do you see right here where this thing had come back into this lower band, give us a signal here? That trade was only good for about 10 points, but that's what we're looking for. Is you want to see a close above the blue. You do not want to buy these here, even though sometimes they work out like right through here, but you want to buy the, see how right through here, you wouldn't want to buy in here. See how this is starting to snap down. You want to wait for the purple to be underneath the green there on that trade. That's the trade that we're taking now on the S&P. I'll go pull up the S&P chart and you guys can see it a little bit clearer. S&P really hasn't had as much of a movement as previous. You can see how you had this impulse. Ideally, we would have liked it down here, but we saw this thing right through here, and that's where Dave's like, kind of jumping the gun here a little bit. So realistically, right here would have been our entry. So about a point better than what we got. Made money there, broke even there. This was the trade, though. You can see right here where it closed right here in this range, the 24 to 75 range, and you can see this thing's run for now going on almost 5 points. This is a perfect trade right here. See the entry there? Right next to that purple close. Once it got to the midpoint, I took one off, and then once it got up to the top Bollinger, I took that trade off. So I've gone back to trading my own accounts a little bit, so that's why you're seeing additional trades that maybe you guys aren't receiving. So let me see here. But that's how we typically like to set up the market. Let me see if I get this pulled up here. That go-to meeting is still taking forever. Let me close some of these programs down. See if that's going to speed it up. Do you guys have any questions on the trading piece? Let me do this. Let me just open this up for conversation while I get this trading plan stuff done. Let's see who we've got. I'm going to unmute everybody. Are we here? Here's some people. I'm going to mute. I know who the culprit is here. There we go. Eduardo, yes, you can talk actually. I've unmuted everybody except for one person just because they typically have background noise. The purple line is a the purple line on the chart is a 5 PMA. So I'll go over the exact settings here. So right now I have a 10 PMA, a 5 PMA, and then Bollinger Bands. You can see on my little box there.
And is that a change from an EMA?
Yeah, I changed it.
Okay.
Yeah, I changed it. And the reason was this was just smoother. That's all it does is it's more weighted, so it's not as choppy. Do you see how smooth this line is? I'll throw a EMA on there. And the EMA actually just ended up giving us kind of some false signals. And we just wanted it to be a little bit steadier of an actual trade. Let me do this here so you guys can see it. Properties. But you can see how well this trade is. And then technically, that is a long. It's a weaker trade than this long. But this trade will end up working out. This will take out this high, and you'll start to see this thing run again.
So should we
show you
to PMAs instead of the the EMAs?
Yeah, I would. And and it's actually an 8 is what it ends up being. Just so you guys can see the kind of the similarity here. I'm gonna do it in blue just so you guys can see it. Do you see how it's kind of like a hybrid? Let me change it to 5. Do you see how the 1 EMA is a little bit, so that's a 5 EMA versus a 5 PMA. And do you see how the 5 PMA gives you some better signals, get you in a little bit earlier, get you into some lower risk trades versus the blue line? Like right through here would have indicated a buy pretty much about the same time, but just a little bit smoother. So here's this break here. So remember how we talked about lower quadrant on Bollinger with this signal? It's been pretty lights out. You can see right through here, right through here. Up here was a trade, but because you're in the upper Bollinger, you're taking more risk. So we'll see what happens, how this interacts with this high, but this move's pretty extended at this point. Let me remove this EMA there. But ultimately, when you see these trades, I took a couple right through here thinking that this had bottomed. And then we sold out. But really right through here, you guys can see once it's down in these bottom bands and it gets that close right through here, these trades are pretty lights out. This was just me being overzealous because I'd made $1,000 right here on this trade. And I was thinking, well, I liked it back at these levels before and had this nice impulse that I thought we would get this next leg up. And it started to kind of hold the support level initially when I took that trade, and then it failed. But you can see the actual trade was right there at 958. So that would have been trade number 1. And then it re-triggered right here. This was the trade in the room that we were looking to send the signal on. If you remember, we were talking about 97s. We were looking for a turn somewhere in this point off this low. And then this would have been a nice move, which we missed. And then that's when I took a trade, and then we got into this trade, and then we got out there and made, $400. So everybody should be in the black for the day on the on their trading. So if we're doing the same thing on the S&P, just to kind of go through a couple of examples, you can see where this trade here, this was the absolute perfect example. I'm going to blow it up here so you guys can see it. This is the epitome of what you want to do. So you can see here was our entry right there. We took a half a tick heat, and then from then on, we were pretty much straight up the whole point. Believe it or not, that's when I selected to buy this, but it obviously fills you a tick worse, kind of in that range. We took the first point off at the midpoint, and then we took the second one off at the top Bollinger. Granted, it did kind of shoot higher for a little bit, but that's pretty much the whole move. We drifted back. This would have been a trade here, as you guys can see, and That's why I was okay with taking this signal, because I was really taking it at the exact same price I would have taken this trade. And then here, and we got stopped out there, and then the other one at break even. So could I have taken this off up here at the top Bollinger? Sure. But ultimately, taking one off at making, you know, 75 bucks and then breaking even on the other is not a bad trade. Right here, this is another trade. So it came off the bottom Bollinger there, closed right at the PMA, and then this would have been a secondary trade here. Another trade, taking one off here, taking another one off here, maybe up here. And now you can see how the Bollinger, so right through here, see how you're in bottom Bollinger kind of restricting. This is what Dave was saying, where you're seeing these things get real narrow. And we're going to do this real quickly here. Remember, you can take those if you're in the direction of the 5 minute, but look how good these signals are in a 5 minute when you're down here and you get this close. This technically is a trade at 67, and we would still be long this trade here on a 5 minute. Same thing here, bottom Bollinger, you would have been long somewhere in this range, kind of would have wafted around. So let's say you would have taken that at 73.25, and then that thing traded 70. At the high, it traded 80. So there'd have been a solid, you know, 7-point winner, 5-point winner there. So this was another trade here at 60, 76.25 up to here on a 5 minute. But I've been doing a lot more on the 1 minute just because I want to get in. If I'm two lotting it, I want to get in and just make a point, 2 points on that. What you'll notice is we're working our way up to this high here. So we're apt to tick off. This is where momentum's going to accelerate. See that? See how momentum just went, and it's because it takes out previous highs. Very common trading pattern when you see prices break. That's the high of the previous session. And the reason why we're not in a trade right now is because I'm doing these training calls. I'm doing this training call. But you can see where when we're looking at, yeah, go ahead.
Can you show me how to do the to get the 4-hour chart on there when you go to custom?
Yep. Come to custom here. Pull this up. Go to your instrument that you want in bar interval. Come over here and change that to hour.
Oh, okay.
And then change that to 4. Click OK. So now that's a 4-hour. That's a 4-hour chart of the broad markets.
And do you still have your? Oh, so you have to leave it on custom in order to get that.
Yeah, it stays on custom. You can save it if you want it. You can save it.
Okay.
So you can see how we're getting back to the all-time highs on the S&P here. We're getting pretty close. Remember how we talked about momentum? When this breaks that level, you're going to see a major increase in momentum. Major increase. Yeah. So just like we did when we saw this thing pop on a 1 minute chart. See how it broke out above that high? We want to see that sustained. If this fails, this will be the high of the day, and you'll see this come off. What's happening is you got a lot of sellers up here, a lot of people that bought up in here that are basically getting out at break even right there. So we want to see it work through that overhead. The other thing you want to compare is how's that trading in relationship to the NASDAQ. There's the high on the NASDAQ. We traded above it, so that's what would have given us the clue that over here on the S&P, we were going to break that. So if we compare, let's do just a side-by-side here. And I'm going to get this trading plan stuff figured out so I can pull that up on my other side, and we'll do it tomorrow. I'll just do another one of these tomorrow. I think it's just going to make the most sense. So let's pull up the NASDAQ and S&P side by side.
Can you open up the original document that you created?
Yeah, but no one could see it.
Oh, okay.
When I was doing that. Okay, so let's compare. These are going to be the same time frames, just so you guys can see. So let's go. Well, that's a 5 minute. Let's go to a 1 minute here. So if we're looking at this chart here, this is the high at 912. Scratch this. This was the high at 912. So you see this high versus this high. This is the high at 9:50. This is the high at basically the same time. This is the high at 10:15. Here's the high at the 10:15. So this high, you can see how in this last little impulse at the 10:53 impulse, we traded up near that versus here we were still pretty well below it. We got up to it at the 11:15, and at the 11:15 we were trading above it. So you can see relative strength that the NASDAQ was stronger. That's what tells us that this S&P should push higher, is when this NASDAQ is stronger. So you want to compare these peaks and valleys to say, okay, which market's stronger? So when the S&P is weaker, it's going to pull back down. The other component to this is going to be crude. So crude being up $1.82 today, and basically in a general uptrend, like right through here, that's a pretty good indication that this thing's going to keep pushing higher as well. Because this makes up, I believe it's 20% of the S&P, 40% is the financials. So that's going to be kind of the breakdown of that. Now again, this is where different traders look at different time frames. You know, Dave looks at a 4-hour, 1 hour, 30-minute. You know, he looks at all these charts. For me, I look at 3 that we've already discussed, and no one's right or wrong with how many they look at. But for me, I look at a 30-minute chart, and I get a feel for on a 30-minute chart what my overall trends are. And I'm going to create, like you guys have seen me do this before. When you're talking fund manager, you're talking the big money. What's the big money looking at? And that's very crucial because they're the ones that are driving the market. But for me, that's my range right now on crude. And then I probably would have a midpoint somewhere in that range right there. That's typically how I'll draw my charts, is looking just like that on a 30-minute. And then I'm looking at a 5-minute and determining my trends. You can see I got this impulse, this pullback, this impulse. This should at some point try to retest this price action on the 5-minute. And then I look for a 1-minute entry relative to my Bollinger Bands and moving averages. So lower band, somewhere down here, closing above there. That's just what I'm looking for, these little impulses. Like the trade we took, you saw us get in there, got out there, made 400, roughly, a little bit over 400. So that's really all I look for. Look at that spot. Look at that shot. So you can see where this trade long here, or if we would have gotten in this long here, we would have been long at 58 with a stop below 41. And we would still be in this trade as it kind of waffled sideways. And then you saw this thing break out from 69 to basically 90. So this is a pretty good impulse. This should come up here and retest these highs on this trade. Now, why wouldn't I take this trade? Because at 84, if I'm risking, you know, from there to there, that's 20 cents. That's a lot of risk. I'd rather take a trade back in here and just kind of let it waffle before it breaks out. But this should retest this high. Right up here. See how it's trading outside that upper Bollinger Band? So that can be sometimes give it a little bit of a pullback and then kind of regain some steam like it did through here. And then give it another shot at the title. A lot of buyers through here, though. That's when you saw that snap higher. So go ahead and type questions in the inbox. I'm going to get to the trading plan and make sure you guys can do all that, and then we'll go from there. But if you guys have questions, feel free to fire away. We'll do kind of a Q&A for the next 5 or 10 minutes here. If you guys have questions. There we go. Yes, I will be sending out today's recording. What's the smiley face? All right. I like that. Isn't that cool when you hear us talk about that? Let me zoom into a smiley face. and I'm going to highlight it. That's a smiley face. So what a smiley face is, you see how it came down here and created this first impulse, and then it comes back and it gives us a retest? This is a buy. You see a smiley face, you take that trade. So that's a smiley face set up there where it's basically the second version of that. This would not be because of how long and exaggerated it is. Come on. My server froze. Let me log back on. So that's a smiley face.
So on that smiley face, where exactly would you place your trade at?
Open of that candle or the close of that. You want the trade in the box. You want to get in the box. You could.
So 50-25.
50-25. Normally the open of this bar here. That's a smiley face. This is a smiley face. See how this first impulse is not, and then it failed, but the second one is. This is where we would have gone long, somewhere at this 59 level, 60 level, with the stop below the low if it met our risk parameters. So that's 40, 42. So yeah, we would have been fine there, maybe 41. So we're risking 20, but we would have been out in this impulse so this went from 60. That thing went 35 points there, 35 cents in just that one candle. So we would have gotten in here, would have taken a little bit of heat, and then we would have gotten taken out here for a winner. So the first impulse off here like that is not a trade, but that is. This first one here, even though that's where I took that trade, this is the ideal setup. See how it starts right at the ramp test? I didn't want to miss this trade was my point here, why I got in early. I knew that it was probably going to create our smiley face, but it shouldn't have taken out this low, which is where we had our stop. We had it at 08. We had it right there. So it pulled back to 13, so we were down $150 at one point at the low there, and then we had the ramp test. But once this started to ramp, you can see how the momentum was carrying it higher. Once I saw this start to stall out here, I just said, you know what, we're up. You know, on that trade, I think we closed up $500, but we were down 200 from the previous, so we ended up making $250, $300 on that trade, and that's good enough for me. Here, do you see how this is kind of a smiley face, but it's upsloping there.
So why is the trade that was at around 10.23 not the first impulse and then the second one being the smiley face? Like, how would you know that was the first one?
Yeah, well, that's a great question. This first, I don't ever like the first impulse after a major move like that. Number one. Now, that's not a smiley face because of the shape. See how elongated this one is?
Okay, yeah.
Versus a smiley face is really more like that.
Okay.
More like this.
Got it.
We're about to get one here again, possibly. If this thing can find some support and then curl over, do you see how now the purple is below the green? If this thing starts to turn around, this could be a smiley face. Nope, failed. So we wouldn't take this trade here.
Why wouldn't you have shorted that right where your cursor is, but a little bit farther up at what's it, 1022 on the bottom?
What's the trend? What's the
1022 right there? The way you said the smiley face. Why wouldn't you take that short right there at the top of that candle?
We would take if you're talking about an inverse smiley face, let me show you what one of those looks like.
Yeah, let me see one of those, please.
A sad face.
Sad face. There you go. Into it. See it right there?
Oh, okay. That's a good sad face.
Yep. So versus what you're looking at over here, when you're saying 1022.
Actually, I think that's the one I took this morning.
But you see that this one here, yeah, it ended up working out, but we still had a pretty good solid uptrend. Where versus if you would have taken this sad face here at the 9 o'clock, look at that drop. That thing came back a buck.
The one I took this morning was at 51.31.
You took a short right there.
Yep, 51.31 to what was it? 50.65, I think.
You took that to here.
Yeah.
Yeah, that's a great short. This trade here, it didn't really give us a true smiley face. And the reason why we didn't get this move, guys, is this was pre-market, and we had news. Retail sales was coming out. But I was looking at this saying, I'm taking this thing long, and I'm taking it long 5 contracts. Because I saw this coming. So overnight, what we saw, just to give you guys kind of an example here.
Geez, that was like 2 in the morning. That had to be like 2 o'clock in the morning, right?
So here was the close yesterday. I was going to take this long at 49.27, and this thing traded, up to the 50s. But it would have never stopped this out at the open. But this is the trade I was anticipating overnight, was this big, huge run. But we had retail sales in here. That's why I didn't take it. And because that was the new low of the trade, this is ideally where you want to trade in front of retail sales. You want to be in somewhere in this range, and you would have gotten stopped out here. So if this had put in a higher low, if this wouldn't have failed, we would have caught that move right there. So see this thing falling apart. So this will give us, between now and the end of the day, just so you guys know, being up over 300 on crude today, we're probably done on crude. But you'll see that this is pulling down the S&P. See how this is pulling down the S&P now? So we could have the high of the day in the S&P at least till later. I don't see it giving a shot at the title anytime soon. NASDAQ still holding in strong here. As long as this level holds on the NASDAQ, we should be fine. This old high of the day. Where with this one here, we're below it right now.
So you think that's going to go up any higher, or is it going to stay right around there?
I mean, ideally with the time of the day, this thing's just going to waffle sideways for the next few hours. So we'll see what the structure is coming into the day. This is a very bullish structure, though.
Mm-hmm.
With it trading near the highs like that, this is a pretty bullish structure. But ideally, like you said, time of day. If you take it based on what you saw here, see, here's a smiley face right here. You see it? That would have been good for, let's say you would have gotten it at 79. That thing went to 81.25. So you would have made, 1 point on one and then probably taken the other one off, or at least got stopped out of break even. Just kind of the range there. So let's see what we have.
Smiley face work only on the 1 minute?
No.
The principle is what I'm referring to.
No. Nope. The larger the time frame, the better the smiley face. The less of them you have, though.
Now, when you stretch the chart out, it elongates the smiley face. So how do you kind of?
All of these are smiley face trades. Right there, right there, right there, and right there. All 4 of those. Now this one's not as good of a signal just because, realistically, you probably would have been in on this one here, somewhere down in this range, and you would have had a stop down here, so you would have ridden this trade out, but you would have gotten your move. Let's look here. Here's one right here. See it right there?
Don't you want to try to take them above the center Bollinger Band, though? Or below?
Lower.
Yeah.
You want to take it below, yeah. Yeah,
Yeah.
absolutely. Now, the problem you have is strength of trend. So if you guys remember the trade Dave took yesterday, he took one down here where it was outside the band down there, and it closed in right here, and he caught that S&P trade. So he likes, you know, he's a little bit more of a knife catcher. But right through here, we wouldn't have taken this one, because this is the first one, but we would have taken that one right there. That would have been
So
our
do you take
ideal
the
trade
trade-
right there.
Andrew, do you take the trade on the Bollinger? You know how they have the dotted 20-minute or 20 period. You want to go below that dotted 20 period piece on the Bollinger?
Yeah,
Take a long trade?
that's why I said right here was ideal. Right there would have been our entry, 59. See how it closed between those two? That would have been our exact entry. And this thing skirted up 2 points. We would have covered that at 2 points. We would have covered that at 60, 61, 61 and a quarter. Would have
You
been what we
take
were
the-
looking for in that trade.
Going back to the moving averages, on yours you have a PMA 10 period.
Yep.
Did you say that you use the 8 period and the 5, or do you stick with the 10 and the 5 PMA?
10 and 5. The reason why I pulled the 8 up is that's what I had before was an 821 or, you know, something similar. The reason why I switched it to a 5, 8 and a 5 are pretty much the same. Just the 5 is a little bit smoother.
Right.
Not as whipsaw because it's weighted. So it tends to be a little bit smoother is all. Not as choppy. It tends to be a little bit more fluid. So, but getting back to what Bestie said, could we, this trade with it being in the bottom quadrant of the Bollinger Bands, we could have taken this trade, but what we want to stay away from are these smiley faces here, where it's up in the upper quadrant, because you would have taken this long somewhere up in this range, or when it's come down below and then it's rallied back up, so you would have failed this drop here. And to be honest with you, I wouldn't have taken this one. That's what you were saying earlier, just because it was trading in the upper. But here, you know, let me see if I can find a good long. And again, on the 1 minute chart, they're a little bit sporadic, but right through here would have been a good long. Free market. Any of these down here would have been a good long. I don't, Jeff, but I can upload it. That I can get for free. I know I can do that. Right through here, some of these can be okay. Kind of low risk trades. And again, we're looking at a 5 minute, so I'm looking at a 5 minute chart. On the 1 minute, you're going to get more signals, but down here, this was ideally if we can get it on the 5 minute bottom Bollinger Band with this being green like that, and then compare that to a 1 minute. So this time frame is, let's call it 1025. So that's right through here. That's a great trade. Right through there.
Now, do you change your moving averages when you go to the higher the time frame? So if you're at a 30-minute and a 15-minute chart, do you adjust your PMAs, or do you still keep them at 10 and 5?
I keep everything the same. I keep it all the same.
10 and 5.
I try to choose easy. Okay. Just kind of keep my methodology the same. Really, when I'm looking at my larger time frames, so what you're asking, when I'm looking at my 30-minute chart, I'm not really paying much attention to moving averages. Really, all I'm trying to do here, when I'm zooming out and I'm looking at a 30-minute chart, is I'm trying to get an idea of kind of key levels. Like you guys can see, this is a pretty good low. This is a pretty good, you know, like basically create almost like a ladder effect here. You guys see that? See how this kind of creates a ladder, like rungs of a ladder?
So you're looking for support and resistance.
Yeah, I'm looking for zones. Yeah, and so like for me to really take a trade here or really be comfortable with the trade here, I'd like to see it pull back into this range. What price is that? 68. So to see how this, it traded above it and then it pulled back and now it's trading back at those highs. So we're definitely more bullish in nature. And then from there, what I'll do is I'll go to the 5-minute, and this is really where I'm trying to identify trends or even support and resistance on better levels and say, okay, how good is that price? So for me now looking at this, I'd move this down to here. Kind of zone in a little bit more. And then I would put another level here. Like that. So if I were to take a trade here, you guys can see from a risk to reward, I don't stand to make very much versus what I stand to lose in the drop. So to me, that's not a very smart trade as it stands right now. I'd like to see this thing either pull back or work itself out over time and then break out coming at the end of the day when the bigger volume steps in. You can see how you're in the upper bands here. Higher highs, higher lows, so we have an uptrend on a 5-minute, so that's still intact. But ultimately, that's why you're seeing a lot of this chop, just chopping sideways. No real movement.
When would you consider a short?
I wouldn't. And the reason why I wouldn't is because I'm violating this trend on a 5-minute. To me, this is not an area you want to start dabbling. Not as a beginner. If you're like Larry would take this short up here. He would have taken that trade and be up a little bit. But over time, it's just going to kind of waffle sideways. He's maybe looking for 5 to 10 ticks. So he would have already most likely been out of that trade. But realistically, on a short, you want to know that the trend is down. See, when you're shorting, you want to see this. Maybe you don't get this first impulse off the low, but you do get these other impulses off that level. You don't want to fight those trends. Up in here, see how this broke up in here and then up in there. Larry was shorting this at 48, and then this thing fell apart. So, but just identifying the overall trends is really crucial. And really when we're doing that, you're just trying to identify the peaks and the valleys, right? You're trying to look at this and say, okay, well, there's a low, there's a high, there's a low, there's a high. I've got higher highs and higher lows. This isn't an uptrend. So I don't want to fight that at this point. Once that relationship changes, though, then I could, see it go in the other direction. But not right now. Not right now. So, all right, guys, I got to run.